Hi, I'm John Fitzgerald and welcome to Custodian TV. What a start we've had to 2011. And I mean, a tragic start in a lot of ways. Floods in Queensland, cyclone in Queensland, floods in Victoria, bushfires in New South Wales, earthquake in New Zealand, and then overseas we've got governments in Egypt and Libya under turmoil that's affecting petrol prices. I look at those things and I say it's hard to be dispassionate right now, but me as a CEO and coaching you as a CEO, we look at the outside and bring it in and say, okay, what are the things that are affecting us in building our property portfolio, and do these things, do these events actually have an effect on us? And as you know, more recently, the Japan earthquakes, over and above everything I already just mentioned. So what are these issues? How does it affect us? Well, when the Financial Review and Business Review Weekly surveyed Australia's top businesses and said, what is the number one issue facing you in 2011? They said it's the shortage of skilled labour. And that is the number one issue. And just earlier in March, the federal government, along with the state governments, the unions, etc., collaborated to make some adjustments to the temporary 457 visas and approve the 4-year 457 visas, that is the skilled work visas, within 5 days. Originally, they've been taking 3, 4, even 5 months. And business said, hey, we can't deal with this, particularly with all the mining projects that are going on. Glenn Stevens, the Reserve Bank Governor, has come out many times now in all of his speeches and says, we have a mining boom that we have not seen since Federation. And I couple that with the fact that our terms of trade are at a 100-year high, so we've never seen this before, and our main projects, Gorgon, Roxbury Downs, Olympic Dam, and liquefied natural gas, haven't even started producing, and there are so many mining projects looking to get up and running. And I also look at some of the reports of the big miners. BHP, a profit of $21 billion, nearly as much as our 4 banks put together. Rio Tinto, profit up from $4 billion to $14 billion, so a $10 billion rise. Really amazing to see exactly what's going on in that regard. Now, 2010, what happened? From a financial perspective, we created more jobs in Australia's history than we've ever created in 1 year, but also looking underneath that, we saw wage growth at 6%. Now that's significant, and since the GFC, we've actually seen household disposable income increase by 15%. A lot of people say, John, I read the headlines, and when it comes to property, affordability is the biggest issue. We can't see how properties can afford to rise. Well, if you've got wage growth at 6% and more importantly, household disposable income growing at 15% post the GFC, that's going to drive property prices, obviously. And let's look at that household disposable income. When they measured affordability 10, 20, 30 years ago, they used to measure the average median wage against the house price. But then we didn't have the number of women and double income families that we do now. Today we have 62% of women in the workforce, and Julia Gillard's come out this year and said, okay, one of the things that we're going to look at to solve the skilled labour shortage over the next few years is to try and get another 2 million women into the workforce. Now that'll seriously drive our household disposable income. We can afford to see growth in properties, and as you know, in 2010 we saw record growth in Victoria and Melbourne specifically, and record growth in Sydney. Haven't seen those growth for 7, 8, 9, 10 years. What else has happened post the GFC? 56% of Australians who are paying a mortgage are actually ahead on their mortgage payments. And that's up by 12%. Amazing. Our deposits are up 23%. So our savings are up 23% post the GFC. Now these are significant numbers, and the only thing in my opinion stopping the market from actually running, which it's already doing in Melbourne and Sydney, has been the banks and finance. As you know, the GFC was a credit crisis. The Australian banks couldn't get money from overseas. That is loosening up. You've seen National Australia Bank come out with their slogan, we're breaking ranks from the others, come along to us, we'll abolish your exit fees. And now we see Commonwealth and various other banks offering special deals to borrowers. And we at InvestLoan are now getting offers from banks. Previously, through the GFC, we had loans come down to 80% on very tough vals. Now they're getting back up to 90, even 95%, and the valuations are being done again on market value. So I'm seeing the second half of this year that to fully penetrate. The big one's going to be Queensland. Queensland was hit by the floods, and they're expecting growth to be double what the growth's going to be for Australia, nearly 5.5%, 6%. Because remember, they need to rebuild or renovate many thousands and thousands of homes, and that will start to come through in the second half of 2011. Plus, the government have set aside $5.8 to $6 billion on fixing infrastructure. Now, these things will have a huge effect, and you're going to see an absorption of property, but also of jobs and job growth, which is going to create that vacuum in Queensland towards the end of 2011, and you're going to see prices rise. Remember, the median house price in Brisbane is $460, Melbourne is about $560, and Sydney is $624. So there is room in Brisbane for growth. Where am I targeting? I think Sydney's a real hot spot. We've got properties there under $500,000. I don't expect us to have properties under $500,000 in the second half of 2011. We've still got properties in Brisbane under $400,000. That'll completely evaporate by the second half of 2011. And Melbourne is really the boom state. So much happening down there, and they're recipient of migration. So we're in there under $450,000, and all of them offering great rental growth. This is an amazing time because I see us right at the precipice of another real estate boom, our 10-year cycle. Tune in for that. And if you ever have any questions, I look forward to hearing from you. Thanks for listening to me. Cheers.